get started. Types of costs. Tracking costs in OpenAir provides companies with a way to track margin and profitability. So in order to do that, you may want to track 3 different types of costs in the system. Labor costs, they provide how much time your employees are spending on a project and what is the cost of that time. Expenses, which can include the cost of travel spent on a project, and any non-labor related expenses such as product or purchasing costs you might have that need to be tracked into the project as well. Now, costs are generally related to an object, such as users, expense reports, purchases. But you can also track costs via a cost center, which is a great way to help reporting and accounting and track those costs within OpenAir. So cost centers can be set up on many objects within OpenAir. They allow you to stamp transactions and run reporting with regards to those costs. You can add cost centers to all of these objects listed here: users, clients, projects, individual tasks, expense reports, time types, which is an additional category field you can add to the timesheet, and services, which are used to designate and bill for a specific service to a client. Now, a user can belong to one cost center and work on a project that belongs to a different cost center. And in OpenAir, you can do cross-tracking, which we will discuss in more detail later in the presentation. How do cost centers work? Well, once cost centers are created in the system, you can create rules on how the expense receipts and the time entries will be allocated to the cost centers. So rules can be based on any of the objects available on the list. And when a receipt or time entry is saved, it will be checked against the selected items in that order. So if the receipt or time entry matches a selected item that is associated with a cost center, then that cost center will be assigned to the receipt. So in this example, if the rules specify project and user, and the receipt or time entry has a project associated with it, and that project has a cost center, the expense or time entry will be assigned and stamped to the project's cost center. If the receipt or time entry doesn't have a project, it will look at the user's cost center, if any, and stamp the expense or time entry with the user's cost center. Now, you can have the same or different order for both the expense receipt rules or the time entry rules. Now, something to remember is that cost centers are sticky values. And what we mean by that is that when entering time and expenses, those transactions get stamped with a cost center. And if there's a need to change that cost center after the fact, the transactions are still stamped with that original value. So the only way to change those would be to do a database update or reverse an entry. Now, if a user's cost center changes, for example, the timing is very important of when it is effective and how to apply that change. There is no date effective way to say when that change takes effect. So the minute the change is made, the next transaction created will have the new cost center. How do cost centers work? With entity tags. So now, this is one way to track movement from the cost centers. User entity tags are custom fields that give you the ability to add date parameters. It is an optional feature that's turned on at a user level. It creates another link on the user record. It gives you the ability to set up a tag group, and the tag group has a series of values that you can associate. So in this example, the tag group is based on employment dates, which can be used if you wanted to identify the period of time before a user was employed from a utilization reporting point of view. In regards to cost centers, the way you can use entity tags is to say, on this date, I was in this cost center, and now on this date, I'm in a different cost center. We definitely recommend using entity tags with cost centers if you're looking to track movement or any reporting by dollars or time by cost center. It will definitely enhance the reportability of the cost centers. So some of the pros of using entity tags are the date effect control, and that you can use these for all types of tracking, not just department or transfers. Some of the cons for this feature is that there's no inherence option. These are not sticky values and really are only used for reporting and are only available at the user level. User cost options. So on a user record, you have an ability to track cost. Now, if you have a desire to do project profitability, you will want to find a way to accurately put those costs into the system and ensure that you have the right security measures in place. And the best way you can control access to those costs is based on user roles. You can control who has access to the primary, secondary, tertiary costs, and you can control who can see those costs and run reports using those costs. Something else you can do is you can also track cost changes historically. So for example, if somebody gets a salary increase, and using this example, this user is currently at an hourly cost rate of $85. If they get an increase today to $100 an hour, we would want to make an historical cost entry. Your start date would be their date of hire, or perhaps the last time they had an increase. Their end date would be yesterday, February 14th, and the hourly cost would be the $85. And then in the current hourly cost field, the $100 increase rate would be placed in there. So it's a great way to keep track of the history of users, and you can report on it based on the time period that you're looking to pull data for. Now you can also have 3 different cost levels per user. So there's an internal switch, and what that we often see being used is the primary loaded cost is used to track a salary level cost for an employee, which could include benefits built into the calculation. And as a salary measure, security measure, you can only allow certain levels, such as executives, human resources, finance, etc., to have access to see this rate or to run reporting using this type of rate. But you may have other team members, like project managers, that you would like to have access to a level of cost for project margin or reporting, but not necessarily see an employee's actual cost. You can use the secondary cost level and have that be more of a blended rate based on roles or groups. The tertiary or the third level cost could be used as a target bill rate for forecast reporting. You could track target bill rates as compared to what was incurred or actually billed and see what the difference of the loss is. You can also override the terminology that we see here to anything you like. So the primary loaded cost can be renamed to actual cost. So sometimes you want to adjust your cost. And sometimes it's hard to decide how many hours should be attributed to cost. So we always suggest recording all hours against a project. And if you're a salaried employee, you are most likely not getting overtime beyond the 40 hours worked. So in OpenAir, all hours in the system by default have the same cost. So if you use all hours, it will reflect the same cost rate in the project profitability. If overtime is worked and not compensated, the cost ends up being overstated, and the margin in reporting is then being understated, giving more margin than what it should be. So there is a way to solve that problem. You can adjust the hourly rate based on the number of hours worked so that you're only accounting for the salary of the person working on the project. Now to do this, there's a report called % Historical Utilization, which can be found under the Advanced tab in the Report module. When you're configuring that report, a couple of things are important to note. It's important to pick a time frame. Most companies do it on a monthly basis. They run it at the end of the month. You can also decide if you want to base it on billable hours or all hours. It's totally up to how your organization wants to handle the adjustments. From the output of the report, you can then adjust costs. So if a person didn't work enough hours to get the 100% utilization, you can increase their hourly rate. If a person worked more hours, then you would decrease their hourly rate in order to not overstate the cost in reporting. So after you run the report, you will get a list of users and their computed utilization. Depending on which UI you're using, the tips button will either be at the bottom of the report, saying click here to adjust the loaded cost, or you will need to click on the tips button located at the left-hand side, and it will create a cost data adjustment in the table to normalize the percentages. If you do not want to adjust everyone in the report, you can run the report, determine who needs to be adjusted, remove everyone else, rerun the report, and then use the Adjust Users Loaded Cost option again. So what will happen is after you click that button, it'll open up a new window, and that will allow you to run the cost adjustments. If you want to redo a month, you can check the Overwrite Existing Cost checkbox. And something to note is that cost adjustments are only applied to the level 1 primary costs. Okay, some best practices with adjusting costs that we recommend is when doing the adjustment, remember, only the primary cost can be used. It is also a good idea to have a single person or small group running the cost adjustment and let others know when it's going to happen after all work has been done for the month. Determine your frequency. Monthly is the most common time frame that we see. Consider what contributes to the cost. Is it all hours, client hours, worked hours, not include vacation, etc.? And if it is less than 100%, remember that lowers cost. If it's greater, then it increases the cost. Okay, something else to think about when using cost is cost overrides. Now, cost override is restating what a cost for an hour is going to be at a project or a task level. So to do this, you need to have the internal settings enabled, and at the project level, you can manually adjust the cost for a specific user on a specific project. If you're using multiple costs, you can adjust all 3 levels. This is helpful to get the profitability as accurate as possible at the project level. So an example of this could be in a case where there's a transfer cost between countries. If a U.S. project manager was borrowing an offshore user who would typically be billed at a different rate, but they can bill them at the U.S. rate and would like to adjust their costs just for this project, they would do a cost override. Another use for cost override could be a subcontractor. Gives you an hourly cost for one project, and on a different project, he's charging a different hourly rate based on work he is performing. So you want to be able to override their costs at a project or a task level. You may also have a target bill rate that you want to override on a per project basis. In reporting, if you have the override feature enabled, the reporting timesheet values can either be pulled as actual or current costs. Actual costs will use the override cost, and current costs will come from the user cost. So you can take the cost you charge to another company minus the cost to your own company, and the difference is what you've earned. Okay, expenses. So expenses can be used to generate travel expenses associated to projects. And as the expense receipts are created in OpenAir, the cost goes against the project immediately. They do not have to be approved in order to report on them. Receipts can be associated at the task level for more detail in reporting. And many organizations bill and or pay on a per diem basis. So if they are actually paying out actual reimbursements but billing per diem to the client, the actual reimbursement is what hits the projects. So you may be losing revenue if you are doing per diem billed back to the customer. If you're paying per diem reimbursement and you're billing per diem to the customer, then the costs are going to match. Another feature that we find is very helpful in controlling costs is the expense policy feature. It is an internal switch, and when it is enabled, project managers can set limits on expense items. When a user enters an expense receipt against a project that has an expense policy in place, users will not be able to select expense items that have not been allowed in the policy. And it will also cap maximum dollar amounts by expense types. So in this case on the screen, the only allowed expense on this particular project is airfare, and it's capped at $250. The expense policy is defined in the Properties tab of every project and is a great way to control costs on a per project basis. So purchases. Now purchases can be used to enter costs against a project, and one way to do that is a quick PO, which states, I bought this product for X amount of money on this date, and when it is saved, it immediately becomes a cost against the project and does not require an approval. They are very easy to create, simple to report against, and there is no wait time to report on them. Another way is to do a purchase request, which requests a purchase be created that follows an approval process and is then converted to a purchase order. And as the amounts are received and identified, the PO is fulfilled. Only a fully fulfilled purchase order becomes a cost against the project. So when reporting it, it will only show you fully fulfilled purchase orders against projects. And our last topic today is reporting. Reporting is going to be our end result to all this great cost data we captured. You can control what costs are reported on at the role level. If you're doing overrides, you want to make sure you do an actual cost versus a current cost to make sure you're getting the adjustments. When using purchase orders, only if your purchases are fully fulfilled will they show up in the report. And expense reports have a lot of different dates associated with them. For example, receipt dates, created dates, submitted dates, approved dates. Make sure you're setting the reports to pick the date that makes the most sense to get the costs pulled in for the time period you are reporting on. Okay, and in summary of what we talked about today, costs are a great way to track margin and profitability. There are many ways to track costs in OpenAir. We talked about user-level costs and the multiple levels you can access at a user level, expenses, the types of purchase orders, and cost centers, how we can link all the costs to projects and users and different objects within the system. There are a number of ways to manipulate the costs. We talked about cost overrides and adjusting the cost. There are ways in a system to control who views what cost by using role permissions, and are great security measures we can put in place. It is important to remember that it is not just coming from the timesheets. It's expenses, it's all the other items that may be necessary to deliver a project. We always recommend to be sure to review your company's policies and procedures before implementing cost tracking in OpenAir.